Good morning, this is Samir Gurung from B22 Limited with this morning's market report. Date today is the 23rd of March 2015. Let me start with equities. Equities last week were up. FTSE 100 touched a record high on Friday. European equities were near record highs and US indices were also up. This was mainly on back of Federal Reserve last week coming out in their monetary policy statement with an equity-friendly report, delaying the expectation of interest rate hike, again sort of affecting equities in a positive manner. Looking at commodities, oil prices were down this morning, mainly on back of oil minister in Saudi Arabia coming out and announcing that output for oil will be near record highs this year. It's currently around 10 million barrels a day they're pumping oil, which means with supply increasing, demand sort of remaining same, obviously oil prices are under considerable pressure. What also doesn't help in regards to oil prices is the fact that OPEC seem fairly comfortable in their view of the oil prices, in the sense that lower oil prices means more competitiveness in regards to shale gas output, for example. So on the back of that, they're fairly comfortable. Oil prices may remain low for a while. Gold was up last week, up 2.8%, mainly helped by dollar being down. Gold and dollar tend to have a seesaw effect because gold is traded in dollar. Whenever dollar goes up, oil becomes more expensive. So gold becomes more expensive, will go down, and vice versa. So on back of that, with dollar being down last week, gold was up. To give you some brief background on gold actually from 2008 to 2011 was up around 70%. Over the last 2 years has gone down, lost about 30% on back of dollar strengthening. But as of now, gold has found some stability and fundamentally looking stronger. Potentially, the likelihood of going up are high. Moving on to the currency markets, dollar last week was down against its major counterparts. On Friday, it lost about 1.5% against the euro. It lost about 1.3% against the pound. Over basket of major currencies out there, it was down about 2.3% on the week. Again, this was mainly on back of Federal Reserve coming out and sort of announcing monetary policy easing, with also delaying interest rate hike, affecting the dollar on the downside. Moving on to other news out there, we've got news in Greece at the moment, which could be key because we've got the Prime Minister of Greece, Tsipras, going over to Germany to plan out what may happen this week. Now the key is Greece are running out of money at the moment. The coffers are running dry. They're pretty much scraping the bottom of the barrel to pay salaries, pensions, etc. Now what Greece want is they want short-term funding from the Eurozone in order to obviously pay salaries and pensions, but after that take a couple of months to plan out some sort of reforms. Germany, on the other hand, want these reforms planned out now before giving money to Greece. Now the key is that if Greece and Germany can't and don't come to some sort of resolution by end of this month, Greece will run out of money. The likelihood of Greece exiting could be very, very high. So again, watch the space in regards to that. On the final point, pound seems to be under considerable pressure at the moment. This is mainly on back of the elections in May. What the market's expecting is, regardless of the outcome, pound could be under pressure. We're looking at three likely outcomes at the moment. Hung Parliament being the most likely one, with obviously Labour and Conservative going neck to neck. If that is the outcome, again, that sort of increases political uncertainty. Pound will be under pressure. If Conservatives win, they're looking at a referendum of the Britain's membership in the Eurozone. That could obviously put pressure on the pound. And if Labour win, they don't seem to be more sort of pro-business. They're also looking at energy crackdown. They're looking at increasing taxes in different sort of sectors, which could put pressure on the pound. So the key is these elections coming in, pound would be under considerable pressure. That's it for today. See you tomorrow. Thank you very much.